Good afternoon. I would like to give a very warm welcome to our speakers and audience. This event is going to be fully conducted in English, and participants may ask questions through the chat box, and we will go over them after the speaker presentations. As you all know, at the beginning of the year, we launched an ESG campaign for the next 3 years aimed at promoting in Spain the incorporation in companies of measurable criteria in favor of the environment, society, and good governance. We have seen how the new generations want companies that think long-term and are committed to the environment, their employees, their customers, their suppliers, and societies with ethical principles and good governance. In fact, sustainable investment has increased an average of 30% in the last 2 years and today represents more than $30 trillion. After COVID-19, this trend will only continue to accelerate. Influenced not only by the increased resilience from companies aligned with sustainability, but also by increased regulatory requirements in the EU and beyond. It is a pleasure to host this event on investing in sustainability and count with the participation of Clarity AI, Banco Santander Asset Management, and Iberdrola. Today, our speakers will be Paloma Baena, Vice President Global Partnership at Clarity AI, Carmen Boulet, Partnership and Branding at Clarity AI, Marta Martinez, Head of Analyst at Iberdrola Energy Policies and Climate Change Division in the Chairman's area, and Ana Rivero, Global Head of ESG and Investment Content at Santander Asset Management. Thank you for being here with us today. Paloma, the floor is yours. Thank you.
Thank you so much, Aida, for the welcome. Thank you all for joining us and taking time from your very busy schedules, I'm sure, to join this discussion on sustainability today. I want to start by referring to news yesterday from Japan. Japan is the third largest economy in the world. And just yesterday or the day before, the new Prime Minister Suga, announced the commitment to become carbon neutral by 2050. And this is a significant move because just a few months or a year ago, Japan was very vague on its commitment, that it would do it at some point in the second half of the century. However, the reason why I wanted to bring this up, because for me, the most interesting part of it was the change of attitude it reflected. When Prime Minister Suga made the commitment, what he said, and I'm quoting, is that dealing with climate change is no longer a constraint on growth, but rather it will be an opportunity that would lead to changes in industrial economy, industrial production that will bring about growth in Japan. I think it's remarkable the way he phrased it and the way this is that the frame that I would like to propose for today's discussion, sustainability as an opportunity for investors, an opportunity for companies, and for society as a whole. We have seen, as Aida was referring to, in recent years, environmental metrics, social and governance benchmarks become incredibly important for corporate as part of their strategy, for investors as a guide and a benchmark to decide on where they will invest and what type of new products and financial innovations can they propose. Also for companies like Clarity that look through technology to make sustainable investment more scalable and more of a reality across the world. As Aida was saying, we can expect this trend only to continue, not only because of the extremely big regulation package that is going to come from the European Union to support the green growth ambition, but also because in the past months we have seen ESG-aligned investments to be more resilient and perform better than averages such as the Standard & Poor's 500 index. And last comment I will make about this is that in addition, the European Union is tailoring and targeting a large percentage of the next generation funds that will be used for the recovery and resilience of Europe in the next few years to sustainability outcomes. So all of these makes this conversation today even more relevant. And we have the luck of having all these perspectives at the table today. We have Ana from Banco Santander, Marta from Iberdrola, and Carmen from Clarity, who will be discussing these issues, again, within the broader framework of sustainability as an opportunity. I hope that that's what you will be sharing with us. So without further ado, let me start the discussion with you, Ana. I wanted to talk a little bit first about sustainability strategy. Santander Asset Management became the signature of the Principles for Responsible Investment in July of 2020. And currently you have over 5 billion assets in sustainable, responsible, socially responsible investment, together with a team which you lead. So I wanted to start asking you about your broader strategy on sustainable investment. What are the levers you're using? And in general, what is your approach to achieve your objective? Ana.
Okay, thank you, Paloma, and thank you all for having me today. This is really a pleasure to be here with all of you and talking about a subject that I think it's going to be not on the agenda, but on the day-to-day business of everyone, and not only from a corporate point of view, but also from clients' point of view. This is why my company or my group, which is Banco Santander, is so prepared, I would say, to share with everyone what we think would be our contribution to this new world of new investments and new financing. There's both sides of this new economy, investing and financing, and it's in the investing part where my company, with Santander Asset Management, comes to the forefront. But as you may imagine, we work really close with the rest of the group and also with the financing part of the green economy and the new social economy. We have been here for more than 25 years when no one talked about ESG. ESG was not invented. It was you only talked about ethical things and responsible way of investing and things like that. Everything based more on exclusions than anything else. And it was not even a trend, but not even a theme, because now it's becoming trendy to be a thematic ESG investment oriented. But for us, it has been always something really important, but I have to be honest, and there was no demand really for this type of investment. So the development of this type of investment have come hand by hand with the 2015 agreement of the ESG in the Paris Agreement. And along that, all the regulation that has come that we will talk later. So what we did is to start bringing to the internal conversations the necessity of creating a specific team to address these changes that we were seeing coming. First of all, it was necessary to hire people from the teams that were already addressing the SRI, the responsible investment, which were not very much, and in Spain it was not really very well developed. So it was like 1 year and a half search for people. But then with our own people and the people that we hire, we decided to start transforming the way we measure and we incorporate ESG in our funds. So we have now an ambitious plan of having all our funds rated, not only our funds, but also third-party funds that we distribute and we incorporate in our portfolios, also rated under our own methodology. So this has been really a path or a journey that from the last 2 years, it's been alongside with Clarity, I have to say. And really impressive how we are seeing now that demand is driving the new advances in this way to invest. We are already experiencing that everyone needs here training, needs information, and needs this type of events like today to become aware of more and more each time of the necessities to change the way we construct or we develop the economy. And as I said, from our side to channel the retail and institutional money through the investment funds to finally finance this new economy has put us a responsibility that we very much like, and we are developing together alongside with the bank as it has to be. No? But really a big change in, I would say, 2 or 3 last years. Not only us constructing all these structures, but also joining the initiatives, as you said, because we were signatories of the PRI only in Spain and only for the pension funds asset manager back from 2007. But what we achieved this year is to become signatories in every country and in every single company that is dedicated to manage the assets of our clients. So this has been the big transformation inside Banco Santander. So I think I would stop here. So, but so many things to say and really exciting.
Excellent, and congratulations for that. I understand that reflects also a mainstreaming of that culture inside the bank. So congratulations on that great achievement. Let's hear now from Iberdrola, Marta Martinez. Welcome again. Iberdrola, clearly it's a company that we look up to when we come to discuss sustainability, but I'm sure there are still challenges and ambitions that you have. You have committed to become carbon neutral by 2050. And something that I found very relevant in your statement is that Iberdrola states that you're able to do this because you're 20 years ahead of the current energy transition. Can you tell us a little bit more, Marta, how sustainability is managed, understood, and Iberdrola, and it has led you to be in this position of, I would say, advantage, at least in the environmental pillar today?
Yeah, thank you, Paloma, and hello to everybody, and thank you also to the for organizing the event. It's a pleasure to join the conversation. Yeah, as
Marta, could you speak a little bit louder, please?
Yeah, okay, I'll try. Okay. So as you were mentioning, Paloma, yeah, in Iberdrola, we feel that we started 20 years ago already in this path towards decarbonization of the economy, and towards an energy system with no carbon emissions. We totally aligned our business strategy on that path, and we've seen a deep transformation of the sector over these 20 years. And now those scenarios that some years ago were totally impossible to, and nobody would get on those, I think we're seeing now that they are feasible, that technology is coming along. And also, as Anna was pointing, there's been also a transformation in society and also at policy level. We have invested in these 20 years in about 100 billion euros in the green economy, and that includes generation technologies like wind, onshore and offshore, like solar. We've been closing in parallel our most polluting facilities also. We're investing also in energy storage with hydro pumping and also battery storage. Networks, of course, we see that networks are going to be the backbone of the new energy system, where there's more electrification of energy users and digitization. So today, we have about over 30 gigawatts of capacity installed in renewables, out of a total of 50 gigawatts.
Marta, I'm sorry to interrupt again, but could you please maybe
speak louder?
No, I think it's holding the mic a little bit closer.
Closer, okay.
It's really
let me try.
And we don't want to miss it. Thank you.
Okay, let me try this like this. So in parallel, what we did is we integrated the SDG agenda in our governance scheme. That's now really part of our DNA. When everyone in the company, it's quite amazing to see how everyone has, acquired that framework and uses that framework to put its own activities into a sort of a global language that we all understand. And it's a matter of also integrating all the contributions that we make. Of course, we have focus SDGs, and these are number 13, which is climate action, and also number 7, related to energy access. And we see that integrating sustainability as a whole, it allows you also to detect better and analyze better risks and opportunity, to define better business models,
And again, to have that long-term strategy and that long-term commitment that you were pointing out at the beginning, Paloma. No? So we have linked our strategy to SDGs. We revised the corporate governance structure in 2018. We've also integrated the social dividend. So beyond, let's say, shareholder value, looking at social dividend on our global contribution and engaging with stakeholders and making sure that we share value across our communities where we're located. And this has, in the end, a reflection in the bylaws, in the purpose and values, in all the corporate governance scheme, in our policies, in the committees that we set up where sustainability is part of those. So I think that's also been really helpful in kind of transforming and looking at sustainability as a whole. And then the third point I wanted to mention when it comes to how do we look at sustainability and our long-term targets, and you've mentioned it already around Japan, is that we view that sustainability is really an opportunity. It's not a lag. It's really an opportunity. Over this time, we've experienced ourselves, that by investing in a decarbonized model, you can also generate growth, you generate employment, you generate industrial opportunities, and in the end, you generate, let's say, a long-term value that the economy and you generate prosperity for society as a whole. And I'll leave it here for now.
Thank you so much. I mean, it's really, really exciting to hear, Marta, that sustainability has made it to the bylaws. That is quite an achievement when we think about really integrating the principles of sustainability and the values into actually the framework of corporate governance of the company. I'm certainly going to follow up on that. But before that, I would like to invite Carmen to share with us, Carmen from Clarity AI. I think it's been mentioned by Anna before, but in the aftermath of the COVID-19, and in terms of sustainable investment, as we're discussing right now, first, what have you been observing? And second, what are the ways in which we can, using technology, play a role in combining these two worlds? Investors that are looking for real sustainable investment opportunities and companies that are really making an effort not only to align internally, but actually to innovate in their services. Carmen, please.
Thank you, Paloma, and thank you everyone today for hosting us and Marta for joining us in the discussion. So first of all, let me address the two parts of the question on the COVID. So I would say it's actually one of the silver linings, or the few silver linings that this pandemic has brought. It has actually sparked a period of reflection for us all. So at the end, so people, individuals are thinking about their values, about what's wrong and right with society, what they value most. And there's no surprise that this has actually also translated into an increased spotlight on responsible capitalism, right? So actually investors around the world are reflecting on how they can best use the powers to fix the societal challenges and have a positive impact. What we've been seeing in Clarity, for example, and Anna, so definitely it's an increase in demand. So for example, at Clarity, we've signed, so we've seen this increase in demand, right? So we've signed in the last 6 months 8 times the clients with the assets under management than in the preceding period. So we're seeing, as everyone, Aida in the beginning, Paloma also mentioned, that this trend is increasing, it's going in the right direction, and it's here to stay. So that's on the COVID. So the silver lining on the COVID and responsible capitalism. On the second part of your question, how can technology help? We actually at Clarity, before even going to technology, so we believe that it has never been more important for investors to have accurate insights on the true impact of the companies in which they place their trust and their money. So we've talked a lot about, and the market is talking a lot around ESG, and at the end, definitely ESG is something that we should continue. So ESG as reflection of the risk that a company can, like sustainability factors, how this affects a company financial performance. But we truly believe in Clarity, and it's part of our vision that of bringing impact to market. So when we say impact, It's adding an additional dimension to the usual view on risk and return, but also the impact, and you mentioned it very well, Marta. So the social dividend, I believe you called it. So it's actually the impact that the companies are having on people and the planet. So it's beyond their financial performance, really being able to have accurate insights on impact. So historically, investors that are trying to measure this impact have faced many challenges. There's fragmented and unreliable data. There's not one standard, like this definition has objective. There's a lack of standards and tools. It's mainly been too hard and resource intensive to get accurate and transparent insights on impact. So actually our vision and clarity is our main objective is to actually provide a solution, a scalable solution that uses technology and artificial intelligence to assess sustainability for all society stakeholders. So it's so as Paloma mentioned, definitely. So our core offering, it's around investors, right? We've built a tech platform that offers investors solutions to optimize the societal impact of their portfolios. But on the other hand, we are also more and more starting to. We've recently launched our program for corporates, a tool for corporates, so that we provide clear metrics on their current social impact performance and areas of improvement. So those would be kind of our focus right now. Going forward in the future, our vision is that not only investors, so part of the ecosystem that we've spoken, so it's not only about investors and companies, including sustainability and impact, it's in the future even individuals using the information to foster sustainable consumption and investments. It's governments and regulators, including these insights into their regulatory frameworks and policy development. So definitely we see an opportunity going forward, which is here to stay, and the trend is moving in the right direction.
Thank you, Carmen. One of the things that was very, we thought about carefully when we organized this session today was to be able to bring together the actors that we believe need to speak, obviously, to make the most of this opportunity. How do we expand the pie of sustainable investment? And one of the things that clearly has come to the spotlight is active engagement. Active engagement from the part of asset managers like Santander and companies like Iberdrola and companies that sit in the middle, such as Clarity, to facilitate that dialogue and actually break some of the challenges that Carmen was mentioning about data and actually understanding performance, so that you can then make sure, Anna, that in some of the products you are designing that are aligned with sustainability targets, you can bring and help companies in your portfolio to excel or to improve their benchmark on performance or sustainability, to actually be part of this new offering, which actually will be even more relevant when we have regulations in force, such as the European Union taxonomy. So I wanted to bring you both together, Anna and Marta, in this question about active engagement, investment opportunities, and how are you both positioning yourselves and seeing this as a tool? Because I believe from Clarity, but also from the point of view of sustainability more broadly, that there is some sort of black box in between reporting sustainability and reporting ESG benchmarks, using them to make decisions, and then a lot of information that is not being shared transparently and used for these purposes. So tell us a little bit more about what you think and how you're using active engagement. Let me start with you, Anna.
Okay. Of course, active engagement is one of the main streams of information that we need to first know, ask ourselves to know, to learn if the company that we engage with, even if it's active from only our side, but or collaborative engagement, we need to know if this is working, if they are keen to engage with anyone else, with us, of course, but with anyone, because it has now become not only, it's the same thing that we were talking about demand. It's not only one thing that we propose the companies that we are interested to start engagement with, but we also have had some companies in Spain mainly where we have a lot of conversations with companies, but also in Brazil and in Mexico, that they have come to us to ask for the active engagement, because as we were saying, mostly international and institutional investors, they do ask for ESG performance, for ESG delivery in the policies of the companies they want to invest to. You can see that clearly now in Brazil with the IPOs. There's a lot of IPOs in Brazil right now, more than 47 up to August, and they all, most of the companies that are coming to the market right now, they approach us or some of the other big players in the market to ask for our engagement capabilities, and if we want to go with them, because the way where in Latin America all the ESG references and information are going to be distributed to the public and to retail investors is not, as we know, as developed as in Europe. So they really do need active engagement. But here in Spain, it has been really a very successful way with the companies that we have engaged, and they have understood, because the results actually were there, that transparency, first of all, transparency of the things that they are, of course, we all know that they are trying to improve, needs to be in the market, and they need to communicate what they are doing, and they need to communicate it in a right way, and they need to advance in their ESG performance in the right way, and this you have to do it with some partner, let's say, that is interested in helping you and bringing you to this way of or to this path of better performance in ESG perspective, but also with the right tools and the right numbers and the right metrics, because you can be very interested and have a partner that is also very interested, but you need the tools. You need the correct or the right tools that really help you to measure. As in everything in business, if you don't measure what you do and you don't have a delivery in numbers, it can be intentionally very good, but at the end, an investor needs to monitor the performance and the evolution of the performance of these indicators. So active engagement, it's something that may seem really very theoretical or very I don't know, like intentional, but it has to be really measurable, and you have to help the companies and then the investors to put together both sides of the coin. I mean, what they need is not right now that all the companies are capable to deliver precisely and exactly every indicator that, for example, you can find in your programming Clarity in your database, but they need to know that they are doing things for improving. So that is why sometimes we have some difficulties in explaining to the advisors or the bankers that it doesn't, a company or an investment in this case doesn't need to have really high scores or high rankings in the ESG measures that we use, but what they need is to find or to look for something or some company, some investment that is improving and that has policies and is and wants to deliver this improvement to the investment community. This is much the way that we address that, not only to try to be only with the best performers, which of course we do, but to try to make this process possible, to bring together the retail investor with the small and mid-cap companies, which are the ones that have most the difficulties to deliver on the ESG performance that they are trying to improve.
Thank you, Ana. Marta, would you like to share? Sorry, no, I wanted to continue on the topic of active engagement with perspective of Iberdrola and your views on what Ana just shared.
Yeah, perfect. Of course, I think that well, it's obvious that the financial sector has a very important role to play, and they're really in between. And we have the corporate strategies, we have policymakers that obviously
I think that financial sector is a key piece of the
Marta,
again. Yeah, here I come.
There we
Okay.
go.
So when it comes to sustainable finance and looking at green finance, for us as corporates is also a very valuable tool to actually implement our strategy, and to look at the sort of how to deploy those investments and finding those resources to actually take that strategy into place. So we're really engaged now in all the debate on sustainable finance, and there's many initiatives going, especially at the European level. So we're working very closely there and very actively also to look at the frameworks that are being defined within the taxonomy and also the non-financial reporting. Over the years, and I was speaking before that we started early in this path, but also in terms of financing, we developed a framework for all our green financing transactions, a framework which is based on the Green Bonds Initiative framework, and is a way of making sure, and this framework is public, is available on our web. It's a way of ensuring this transparency that we're discussing, and so we disclose, we commit to disclosing, and then also it's a way of ensuring that our framework is, let's say, its integrity, let's say. So this framework kind of covers how we're going to select our projects. It covers the use of proceeds that will have to go to sustainably or sustainable aligned, let's say, activities, including the taxonomy. And then there is a whole detailed disclosure and also second-party opinions on our transactions, and also a verification of, on an annual basis, of how the framework is in place, how we're using it, and how we're implementing it, and the reporting we're showing around it. So that's the way. Also, it's as an experience of our engagement with our counterparties in trying to find and source the funding for all our let's say, activities. So we've tried to be also innovative in this field, and so right now there's we have a number of bonds, green bonds already issued, also in the field of the green loans and sustainable credits, and I think this is quite innovative. And for me, which I'm not in the finance division, but looking at it, and then when it was first published, it was quite striking to see that we had credit lines associated to sustainability and actually to emissions reductions targets, which is, well, quite innovative, and also is a way of kind of making also the finance strategy look towards sustainability.
Great. I find that also very, very interesting. I think one of the things that we can take away from this conversation, and that leads me to invite Carmen to speak also, is that transparency can pay off. Transparency and sustainability, not only for accessing credit markets with sustainable targets, but also, as Anna was saying, you don't have to be a best performer. You can commit to improving, and you'll still be able to participate in this new realm of financial products. Carmen, one of the key issues that Anna pointed out, and it's leading me into the next block of questions I had for you, is data and transparency of the data. You pointed on some of those challenges before. It is not only about the availability of data, which is a challenge, but also the quality of that data. Today, we still lack a common framework to measure what ESG means. It is true that the taxonomy is going to be, and it is much more nuanced in terms of activities that are related to environmental targets, but we still lack a common definition, and therefore there are multiple interpretations and scores that can be followed from an investing point of view, which has some advantages in terms of flexibility, but clearly also disadvantages in terms of transparency, comparability, and reliability. And this is where solutions like Clarity come in. Tell us all a little bit more, Carmen, about how Clarity is approaching this, because it is critical to enable this dialogue between companies and investors. And I believe, in fact, some of the clients that Clarity has have asked Clarity to help with active engagement because of the transparency around the use of data, correct?
Yes. let me start a bit on your question. I guess there's one part on the vision, like how we see clarity helping on the ecosystem, and then I can deep dive on data specifically, how we address data and clarity to ensure that it's reliable, and so the quality and the coverage is there for investors. So actually on the vision right now, how we envision a clarity addressing many of the challenges we've discussed today, and definitely transparency is one of the of a key one that it's in our NDA. So even our name, it's called clarity. It's actually because of this kind of transparency we want to bring to market sustainability wise. So it's actually we envision creating a platform that connects in a transparent way companies with investors. So when I say transparent way, I mean, so right now the metrics that we have, they're aligned with international standards. Definitely we're measuring ESG according to SASB and like international standards such as SASB and GRI. We have also TCFD in there within our climate model. So there's what we allow, so companies on one side and also investors when they make their investment decisions, is to really have everything related to sustainability in there, not only to the level of which perspective they want to prioritize in their like investment decisions, but also the standards behind them and even the data behind it. So we allow companies, for example, and investors too, but companies to see in a very simple way the snapshot on how they stand. So what's the photo on sustainability today, be it better or worse, but they can deep dive in and see what are the drivers behind it. So they can see behind the different, for example, let's take ESG, which is the most common used metric framework, sorry, they would be able to see how they're doing in each one of the topics, be it environmental, be it social, be it governance. And they, as you mentioned, Paloma, we're actually even working closely with some of our client investors in the engagement with companies that, for example, have not do not have that kind of data or are not publishing that type of data, to ensure that they actually improve over the way. So that I would say that's how we're addressing. So making sure that companies, not only investors, but also have visibility on the not only the ratings, but what are the drivers behind it. And this comes back to the first part of the question. So data, how do we treat data in clarity? So it's part of our name also, I would say, artificial intelligence. At the end, what we do in clarity, we are not only, so we are creating many sources of data, of sustainability data. So on one side, we have, we're actually integrating more than 50 different data sources from third parties that actually our data science team, it's running reliability algorithms to choose the most reliable data point for each company. And then also for those companies that are not reporting some sustainability factors, we have estimation models that compare with other peers in the industry, that compare with historical data, with other type of data to actually have a broader coverage. And all these data, so be it the data itself, be it the source where it comes from, be it if it's estimated, we always show it in the platform. So it's very transparent for investors and for companies where this data is coming from. And this at the end is what allows us to have one of the broadest sustainability and most quality sustainability databases. So we have quantitative data, we have qualitative policies data, and we also have an agreement with, we scan thousands of news to actually also understand not only what companies are doing, but what they, so not only what they're saying they're doing, but what actually they're doing. So at the end, a very strong part of our value proposition and here, how we're trying to address challenges in the market, it's by investing on data, not only so data and the quality data, and also making it transparent and accessible for everyone, be it investors, be it companies.
Thank you, Carmen. I wanted to go back to Anna because Anna, we full disclosure, we partner together on some of these challenges. But you mentioned, of course, that it's not as simple as having just one source of information. And I know Santander has been leading actually in developing their own approach. So could you tell us more about what you're doing here? Thank you.
Yes. The thing is that if you want to be, I would say, within this big group, which is Santander Group, to be reliable in terms not only of data that we were just talking about, but also in a more qualitative way of how to label the investments that we have in each of our portfolios. You need to have your own view of or your own way, your own analysis and research. We use, of course, Clarity as our data provider. As you said, you're partnered with more than 50 data sources. So this is for us really something that we appreciate and that we transmit to our portfolio managers and to our bankers when they ask about how are we capable to say that this investment, this bond, this equity, this third-party fund or a fund is this type of sustainable or not, or is tagged in a way or another one. We need the data, but and it's a data very reliable, and that we can explain, as we were saying, explaining why you have this or the other ranking in the investment. It's very important. But of course, you have to do your own qualitative research, and you have to compare. You have to compare not the data itself, but using this data, you have to be able to compare in the same universe of, let's say, thematic funds, for example, how this water fund is ranked in this position, and the other water fund, which apparently are the same, they do the same, and they can share a big part of the portfolio, is not, or it is more sustainable. And this is where our team has a lot of work to do, because they talk to all the fund managers, external fund managers, and they talk to our portfolio managers in our own funds, just to make sure that the data that we are using from the data provider is consistent with what they know about the company, because we talk to all the companies that we invest in, and when it's a bond and it's an issuer in the fixed income market, you can not only rely on the label of green bond or social bond, which is of course one data that you need. You also need to know if this green bond or this social bond is compared with the same issuers in the same sectors or the same countries or the same currencies, or the same maturities or the same benchmarks that you have. You have to compare how does it perform in your ESG scales, in your own ESG say qualifications. No? So this is why we need really a big team, and a team that we have now not only in Spain but also in UK and in Brazil, because the proximity to the security issuer, whether it's an asset which is an equity or a bond, it's just the same. We need to know them, and the thing is that we are perceived by our own portfolio managers in private banking, also with the portfolio from our wealth management clients, but also in the funds management, which is retail clients mostly. We need to be perceived not only as just data providers, but also the people that can explain to their own clients or can explain to these portfolio managers why this is an A and why this is a C and why this is a B, and not only give you the data. We give you the data and that's it. No? I tend to talk about this because we find mostly in the bankers that are now starting to incorporate this type of information to the financial information that I used to deal with or to work with. I always try to compare that as when you go for information to a sell-side analyst, and it is the same company. Let's say, for example, Iberdrola. and you have the same amount of information and you have the same data, but you are an analyst that one says buy and the other one says hold and the other one says sell, and the data is available for everyone. And so many of the times the difference is because you get to talk with the people in the company, they get to give you a perception, you compare this data in a different way, or you have a different view on how not only the company but the sector and the regulators and everything is going to perform. So in the sustainability is the same. So when people says no, we don't have a common taxonomy, we don't have the same metrics, it's just a mess, it's impossible, I say no, it's exactly the same. If everything was just data and nothing else but data, everyone will have the same recommendation on the same asset everywhere, and you don't find this. Why? Because then you find the intelligence of the research intelligence that you have inside, in our case, inside the company, is what makes really the difference. But of course, you have to have all the data and the best and the more data available, which is the way you can also perform a good analysis.
Thank you, Anna. Very interesting that we still can value the human element, right?
Mm-hmm. Yeah.
Certainly. Just a quick comment on that. It is certainly comforting and true what you're saying, for sure. The truth is also, and Carmen can speak more to this, that for different data points and even for companies, we find differences between data, underlying data. And that's why one of the things that Carmen was referring to is sometimes it's important to actually be able to select the right source and actually offer transparency around these discrepancies, which are not methodologically, but around quality. Carmen, any comments on this?
You've said it very, Paloma. So at the end, even we've seen that for those companies that report on sustainability data, different providers have different data points. So that's one of the issues that we're trying to address through AI, but also through engaging directly with companies. Yeah,
Thank
it's
you.
important, the direct engagement.
Thank you. So we said we would keep some time for questions, and we're getting to that point. One of the questions we had was about the video and the event itself. It will be posted by the American Chamber of Commerce, and I think they will also distribute it. That's why we also did it in English, so that it can be broadly distributed through American Chambers of Commerce in Europe as well, and the United States. So there will be a summary of everything that was said here. So no worries about that. I wanted to ask you, we've talked and we started the conversation, it was me who started it, around environment, but in the aftermath of COVID-19, social issues, and not only COVID-19, what's going on in the United States around diversity conversation, everything that we are actually seeing in the news in these times point us to the need to not only look at environment, which is critical, but social dimensions as well. And this is a question for you, Anna. Are you seeing a change in attitudes around socially responsible investment with a focus on socialized items?
In a way that you can't imagine. I mean, the world was like climate centric, and sustainability was only driven by climate change and all the agreements and all the regulations that we already have there. And it's not a thing that it's not going to be that anymore. Of course not. It has to continue, but it's COVID. What we have seen is that COVID has just raised to the public and to all of us the need of doing the same that we have already done with climate, with some other challenges and risks that now we know that they are forefront and center. You can see that on how the performance of the sectors in the aftermath of the COVID destroying value everywhere in financial markets. The recovery, at first it was led, but of course technology, it has been the sector, and we are just now doing where we are an example of how things have changed. But besides technology, which is of course something that the future is going to enhance and bring to all the investments in any sector, Of course, you had a push from, for example, the healthcare industry. And not only because of the vaccine and everything. Now, it was because everyone was now much more sensible or sensitive to what we call a big view, I would say, or a better way of looking at healthcare, not only pharmaceuticals, but, for example, artificial intelligence in innovation in medicine. And this is sometimes it's technology, but it is also healthcare. We had people now asking for the SDGs and mainly for the Sustainable Development Goals, and mainly the welfare and the number 3. No, what could they find as an investment asset to bet on that, because that was going to be a theme on the new legislations and regulations, as we have seen it is. Of course, what is important to understand is that doesn't mean that we now forget the climate issue. Of course not, and we have seen in the package that Paloma, you were commenting on the first in your first intervention, for example, the package, the Next Generation EU package for the recovery of the European economy. We know that 30% of this financing has to come in green financing, in green bonds. So we are not forgetting about that, but this is much more advanced in terms of regulation than now. What people want to see and they demand is more social bonds. For example, the other day, the social bond that was issued by the European Union was amazing. It was the biggest order book in the history of the euro. It was incredible. There was 17 billion issued, and the demand was for more than 233 billion. That's incredible. So this is a new way or a new scope of investing that anyone was looking at, because apparently it has no returns, and it was something like, well, okay, I invest because I'm a good people, I'm a good person, and I want to invest in those kind of things, but not anymore. It's coming to the front line, and people is asking us from the investor point of view, what are the social bonds that you are looking at? And this is an issue that I understand that is very important for you as data providers, because having a measurable impact on the green part of the sustainability is way much more easy than having that on the social way of the and on the G, on the corporate governance as well. But on social, now you're starting to have a demand that I believe that is going to drive really money from traditional investments to ESG investments, just because now people is much more sensitive on the social themes.
Thank you, Anna. You are very convincing what you're saying, and I just watched the other day again The Big Short. So to move from that to this is actually a reason for hope. So on that note, I wanted to close. Yeah, certainly. I wanted to close with a question for Marta. As Anna was saying, the next generation funds will have 1/3 of them committed to environmental issues, but the other third is committed to sustainability targets. And going back to this theme that we have been discussing throughout the conversation today about sustainability as an opportunity, how are you seeing from Iberdrola the next few years? Are we really before an opportunity to build back better, Marta?
I think that, well, as Anna was saying, I think that the COVID has really put in the center the link between climate change, which I think is something that we already had that crisis. Let's say we had a path and policies were being defined and countries signed the Paris Agreement. But now we've added to that also
the microphone.
We've added also the biodiversity and nature crisis, and also health in the center. So again, and I think there's a very close connection between the three things. And with COVID, that is something that everyone is now facing, no? And when you look at this pandemic and the global impact and how quickly it's spread out worldwide, and you relate those things, and climate change in the end also makes those risks bigger. So I think that people are actually making that connection. No? The challenge we have now and the opportunity that you were referring to, Paloma, is that we have all the countries in the world developing and defining all these recovery measures. And there's really a window of opportunity because these funds are going to be available now because of the pandemic and the economic crisis that's derived into. These funds were going to be spent over a number of years. So we really have the opportunity to define those recovery packages well and tackle the environment, but tackle also sustainability and tackle the social issues and make all those packages more, let's say, more equitable, no, leading to this better recovery, no, in a world more equitable and maybe more inclusive. No? And so in this sense, we're seeing from many institutions, the World Bank, the IMF, in our case, no, International Energy Agency, the OECD, and they're all emitting these recommendations, not how to define those let's say packages. And there's a lot of stake, and I can, there's a lot of pressure. I think that the opportunity is there, and we really have that chance. And I mean, in Europe, I think it's clear that the European Green Deal is really the way forward, and it's the roadmap going forward to tackle putting climate at the center. But it's true, it's also tackling sustainability, is looking for the economy that we want in the future, and it's transforming Europe to make it more resilient, let's say, to the economy that's coming ahead, no, and taking that opportunity. And there is that challenge, and hopefully, and China also announced that they're going to be carbon neutral in 2060. Now it's Japan. So now there's a large number of countries that are really on that path. It's that has to hold, but it's really an opportunity to define that in the right way. No? And one last point here, and I think it's kind of overflying the conversation, it's unjust transition. No? So it's true that all these movements and all these plans, they will have unwanted impacts. And it's true, COVID has placed, again, those social impacts in the center, next along the climate and other, let's say, long-term crises that we had more maybe on the agenda, depending on sectors, and who we talk to. But I think that that's really something that now in the shaping of these plans that, and we all in our daily business and activities, that need to take into account that just transition, and the impacts that we're going to have, even if it's for a long-term positive net impact, but it's true that it's negative things that are happening.
Yeah, absolutely. And thanks for mentioning that, Marta. We have to grow sustainably, but we have to grow inclusively as well. And that is certainly part of the job and responsibility from all the companies here today, but also from the governments. And that's where the big G also comes into place. But that would be subject for a big panel of continuation of this. We're at time. So I wanted to really thank you for sharing with us your enthusiasm, your innovations, your commitment to this agenda. I wanted to summarize a set of news that we've heard, the demand increasing from Ana and Carmen as well, something that was built with a little bit of foresight a few years ago, and now is resounding in the markets, and the markets are responding. The increase for socially responsible investment, which I think is gonna be fundamental for the future, also of the reconstruction plans that we have ahead, and the importance of data, not only from the point of view of reliability, but from the point of view of actually bringing together companies who want to improve on their sustainable performance and investors who are looking to support them because of the interest of the financial markets to align themselves with it. Without forgetting the importance of ensuring a just transition as we seek to build back. So thank you so much for your time, for being here. As discussed, the presentation will be available, distributed by the American Chamber of Commerce. And feel free to contact any of us if you have any follow-up questions on the issues we discussed. Have a lovely day. Thank you all.
Thank you all.
Thank you.
Thank you. Bye.